Get to our calls of the day here. KB Home on track for its best day in more than 5 months after reporting strong earnings. Bank of America sees more upside ahead. That firm upgrading the stock to a buy from a sell rating, raising the price target to $37. KB Home, by the way, down 15% year to date. What do you say?
I think the call is the right one. I think the name and the sector are poised to go higher. Look, it got hit. The whole sector got hit harder this year when interest rates rose, and you saw the 10-year at 3.12. Obviously, that's backed off. We talked earlier in the show about interest rates maybe going higher. I think they will, but not to nosebleed territory and not high enough to cut off the positive effects of a very strong labor market, household formation, particularly in the millennials, and affordability in homes. It all comes together along with the stock price declines to make this sector a very good buy right now.
Specific to KB or home builders overall are looking good?
I'd say home builders overall. I'll go back to Lennar's CEO this week, who said that the fear of what's going on with interest rates and sort of the swirl around the economy right now, that higher employment levels are definitely overshadowing that. The other thing is, if you look at the confidence index of builders that came out, what the builders said, it was a little bit lower, but it was lower on lumber costs, not on confidence. They actually talked about how great traffic has been over the last 2 months.
I agree with these guys. What would you rather have driving home builders? Ridiculously low rates or an explosion in household formation? You're getting the latter, and that's better.
American Express getting an upgrade to a buy at Buckingham Research, $112 price target. Shares basically flat for the year, but the analyst there sees potential for double-digit returns from current levels. Jim.
Not my favorite stock, and I'll tell you why. Look, it's a credit card company. They put capital up to lend to consumers. Why not do that through a Citigroup or a JP Morgan where you've got diversified lines of business to offset any credit woes that may come up? Or furthermore, if you just want to be purely in credit cards, why not play the technology side of it, not the capital side of it, with a Visa and MasterCard? I know a lot of people love this stock. I'm not saying short it. I'm not saying that at all. I just don't like the fundamentals of the name here.
I would say, though, Jim, that the loan business has actually worked out very well for them so far. I agree with you in terms of that will be a risk at some point, depending on the credit standards, et cetera. But American Express tends to have higher credit standards also. And the fact that the larger or the better income people are spending a lot of money, as we see in a lot of the higher income type stores, actually gives me a lot of faith in this one.
All right,
I don't dispute it. I'd just rather have other businesses augmenting that.
Let's get
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.